Hey folks, Stanford here, the rate update. Today is December 21st, 2020. 4 more days till Christmas. So the government passed the stimulus bill. I'm sure there's going to be repercussions of it wasn't enough or this or that or this or that. But the good news is it passed. So I think there's still details to come. But that actually made the market come back a little bit. The Dow was down pretty big this afternoon, about 300. It ended up 30. That's a huge reversal. Mortgage rates, guys, I told you, good news in the markets, good news for the coronavirus, good news for anything is bad news for bonds and bad news for mortgage rates. So we're going to see mortgage rates take a tick up. But there was a reversal kind of at the end of the day. So our rates didn't really change today, but I guarantee you tomorrow they're going to be a little bit higher. So let's get on to the news. What happened today? Well, headlines are Congress agrees to $900 billion COVID stimulus. But is it enough? Is it too late? It still drives me nuts that they had a $1.8 trillion deal on the table and Nancy Pelosi wouldn't sign it. No feedback on government stuff below, but So take it for what it's worth. You could just see, this just popped. If you go back to where we were just a second ago, it says stock futures a little change as Congress prepares to vote for stimulus deal. It's not done yet. Tomorrow, when it does get passed, we're going to see probably a nice little rally in stocks. We're going to see hopefully bond prices or the MBS prices, and I'll go over that in a second with you. We're probably going to see those go a little bit lower, thus pushing up rates. So let's get on to why you come to my channel. What happened today with mortgage rates? Well, what we follow here is the mortgage-backed securities market, okay? Dan, what are mortgage-backed securities? Hey, great question. Mortgage-backed securities, this is what's happening to the price of a mortgage-backed security bond that determines mortgage rates. So you have the mortgage-backed security yields, and then you have what's called loan level price adjustments. I did a video last week about loan level price adjustments. If you want to find out more, go to my channel, check out all my videos. Look at last week's. There was a ton of information in last week's videos. But down is bad. So how I explain all of this is when bond prices go down, it has an inverse relationship with the yields or mortgage rates. What's inverse? Well, if the prices go down, inverse relationship means the price or the rates go up. So we hate when this number's red. So today we saw a red number. This is going to push up rates. But we kind of saw it later on in the day, and I'm going to get to the intraday chart right now. So let's go through this piece of the puzzle. You can see it just kind of crashed throughout the day. So we didn't really see anything until about this level here when it started to teeter and moved above this level here. Once this broke and came down to here, we saw it break. As this time progressed, the stock market got better and better and better. So that's basically what happened today. So what I follow here, just so you guys know why you follow me or why people do follow me, there's a lot of indicators that we can use or a lot of tools we can use to kind of predict where rates are going. And we try to focus on the next kind of 30 to 45 days. I also look out and give longer predictions on where I think the economy is going to be. I'll be honest with you, when we do this, even economists and everybody else, I won't say you're throwing a dart, but guys, we don't know what tomorrow's going to bring. So it's like the weather. The weathermen, they have a tough time predicting today on Monday what the weather's going to be like on Wednesday. So for me to be able to tell you where rates are going to be next year, I don't know. And anybody that vows that, they know, they're lying to you. So I'll keep it at that. The intraday chart, like I said, that came through. It just progressively got worse throughout the day. What I'm expecting to happen again is because of this, the coronavirus, the stimulus package was verbally agreed upon, but they're going to vote on it tomorrow. So when they ink this thing, you should see the stock market somewhat rally, but a lot of times is, what we all call in the business, you basically say trade on rumors, sell on, the action. And what we mean by that is when there's talks about things, that's when usually a lot of the activity is being set in place. And then once it's done and they're like, okay, we'll sign the deal, it's already baked into everything. So this is probably somewhat baked in throughout the day. It's been so chaotic that, the markets, as you can see, are waiting for this thing to get signed. Tomorrow I'll come out with a video midday to explain what the package is all about, because you're like, okay, 900 billion. If I'm you, how does it affect me? Am I going to get a check? Am I going to get this? Is it, if I'm a small business owner, how much money am I going to get? Can I make my payroll? Can I pay my rent? Who knows? So tomorrow I'll do a more detailed video kind of explaining all of that information. But what I expect with rates, again, I think this news was already baked into the pudding in this. So I really don't see a much more of a decline in rates. Let me put it this way. The housing market controls so much of the economy because you usually don't think about it. I never used to realize, when the stock market's watching home building permits and sales and everything, why? What's the stock market care about, building permits? I'll tell you what. Is when you're building a home, look at all of the pieces of the economy that's helping. You're hiring hundreds of thousands of people to build these subdivisions. Then in that, you're buying lumber. Well, now you have the lumber department, lumber companies hiring people to go out and buy, create lumber or cut down trees. To cut down more and more and more trees, they're going out and buying more equipment. Buying more equipment, then they need more gasoline to run that equipment. You can see the food chain there. And then you look at the electrical, the wiring, the stoves and ovens and furnaces. It's not only that house. Every component that goes in that house is another company that employs people, that they get the raw materials from yet another company. So the food chain is huge. That's why people watch the housing market. That's why I'm saying rates aren't really going to do much, because between that and the government stimulus, that's the only thing keeping the whole economy afloat. So that being said, let's go over what rates did today in general. So we go to this chart that I post every day, and it shows you what throughout the country, what is the trends. And what I mean by that is, what is the average? If you took gas prices all over the country, what would be the average? Well, but you're going to say, well, we're in Chicago. Our gas prices are stupid high, and they're usually the highest in the country because the tax hits on the gas are crazy, just like our real estate taxes. So you might say, well, my gas prices are, like here it's $2.35, $2.45. You might say, well, I'm in Louisiana, it's $1.99. Okay, I hope you get it. So when you're looking at averages, some areas or some components of mortgages might be this rate or maybe a little lower. Some are this rate or a little bit higher, depending on some other criteria. But in general, these are 30-year terms, conventional financing, jumbo, FHA, and VA. The rates right now are 2.78, 2.83, 2.75, 2.37. This would be 2.375s. They all go in eighths. Over here, a 1-day delta, 7-day delta, and a delta from February 18th. Delta means change. So rates are 1 basis point lower than where we were on Friday. Again, guys, this is going to change tomorrow because we just saw mortgage-backed securities were down 12. So rates have to go up, okay? So a 1-day delta or 1-day change since Friday is it's down 1 basis points. What is 1 basis points? It's 1/100th. So this is 0.001. Okay, minute, basically nothing. Okay, I take that back. It's 0.01. not 0.001. It's all relative at this point. When you get over these numbers, this is relative. So a 7-day delta, again, last Monday, rates were 1 basis point higher than we are today. So this is basically saying, it's dropped 1 basis point over the last 7 days. So nothing really moved. When you go over here, 89 basis points means 0.89. So if the rate was 3, the rate now is, it's dropped 0.89. So let's say last year it was 4, today it's 3.11. Okay, hope you get it. So that's almost 1 full percent lower than where we are today. So this is a chart of where we were last December and where we are today. Look, almost all rates were 4. Now look down here, almost all rates are in the 2s. It depends if it's the upper, middle, or lower. Okay, so that's the trends of what's going on right now. The market newsletter that we're going to be posting here shortly basically goes over the MBS recap, and again, we're recapping it right here live. Really, it's underperformed, meaning it went lower. That's what the underperform means in subtle language. This week's economic indicators. This week is going to be a snoozer. I got a feeling, because Christmas, Christmas Eve Thursday, Christmas Friday. I'm not going to be here Wednesday. I will be here tomorrow, but you can see there's some economic news coming out, some inflationary numbers on Wednesday. There's probably going to be nobody working on Wednesday. And on Tuesday, we're starting to get other housing numbers. And again, I don't really think anything here is going to change the rates or the rate environment. So now let's go over where my rates are today. So as you noticed when we went over the previous rate sheet, or rate, the average rates throughout the country, it's an average. But we really didn't decipher, and I said it's an average. It could be that rate or lower, or that rate or higher. There's pieces of this puzzle which are called loan level price adjustments, and two of those factors are right here. What is your credit score, and what is your loan to value? Okay, so there's about 7 or 8 different components that can add and subtract to this rate. But what I'm going over right now with this, or with you on this, is if I'm looking at a 740 credit score, 80% loan to value. The other pieces of this puzzle, it's a $250,000 loan on a primary residency that is a single family home. So it's a single family home that you live in. If you're looking to buy that home or do what's called a rate and term. Rate and term basically means we're taking your current balance and we're flipping it into a 30-year term. I have a lot of clients doing this right now, and I hate to say it, it's because their financial advisors are saying you can get the rates in the 2s. Why don't you refinance it on a 30-year term, drop your payment $500, $600, $800 a month. Let's push that money into the market or in your retirement account and let that grow at a 6, 7, 8, 9% return. You're paying $275, we're getting a return of 9. You're still 6% ahead of the game and you have liquid cash. Just an idea. So in this situation, that's what this is. Cash out means we're refinancing your current balance plus getting in excess of $2,000 back in your hand. Or we're paying off some bills. Or you're going to put in a pool. Or you're going to redo your basement. Whatever it is, it means you're pulling out cash. My rate today is 2.75 with a 2.835 APR. On the cash out version, I'm at 2.875 and a 2.993 APR. You can see the variance in here just because we pulled out cash. So, and now another determinant is what's the term of your loan? So if we take the same criteria and we move down and say, what is all this on a 15-year term? Well, on a 15-year term, same criteria, 2.375, and the cash out is 2.625. So you can see there's a little bit lower rate here because it's a 15-year term versus a 30. All right. Now, to even complicate things even more, we have government programs, and those are FHA, VA, and what's called USDA. Okay, this doesn't have to be a farm. We do $500,000, $600,000, $700,000 loans on USDA properties. Many of them are located in California, outside of San Diego, and if you're out in that area, please look us up to see if we can qualify you under the USDA program, because we're booking these deals at 2.375 30-year fixed rates. I don't even have that low a rate on my home. I'll throw that out there. So If you're looking to purchase or refinance on a USDA loan, the caveat there too is you go 100% financing. We're doing purchases right now, $500,000, $600,000, $700,000. People are financing 100%. Normally for those loans, it's a jumbo. You need 10, 15, 20% down. So think if you're buying $1 million home and you got to put 20% down, that's $200,000. In this category, you need zero. That saves $200,000 in your pocket. Okay, VA, if you're a veteran and you have your DD 214 and you have an eligible discharge, or you have the eligibility to qualify for a VA loan, you can go up to 100% financing. So you can buy or refinance that loan with a 740 credit score at 100% loan to value, rates 2.375. This score goes down to 600. This score goes down to 600. This score goes down to 600. The rate goes up a little bit, but not substantial. If you don't fit any of these categories and you want to go with a low down payment program, you could buy or refinance a home using the FHA program at 3.5% down. So if you're buying a $100,000 home, you need $3,500. Okay, you don't need $20,000, $10,000, $3,500. This rate or score also goes down to 600, but in this criteria here, my rate's 2.375. So look at these rates. There's no lender points on these things, and they're 30-year fixed. They're not ARMs, they're not 10 years. I'm not baiting and switching you saying, oh, that was a 5-year loan. No, these are 30-year fixed rates. Now, what are we known for? We're known for our jumbo loans. We do loans up to $5 million. You do need a 740 credit score, but in this case, just to throw out the rates, I have a 780 credit score, 60% loan to value, purchase rate and term, 2.875, no points. No points. Now we do have a program that goes up to, and I'll clarify this, up to $1 million with 5% down. It's in these counties in California. So you could buy $1 million home with 5% down. Normally you would need 20% down. So that's saving you $150,000 from coming out of your pocket. 780 credit score is a 3.5%, 30-year fixed rate, no points. Those are my rates for today. So what am I going to ask you to do? A couple things. One, give me a thumbs up. Please give me a thumbs up. Holiday season, you got to feel good about things. Give me a thumbs up. Hit the subscribe button. The reason why I ask you to do that is maybe you find this interesting, but it doesn't really serve any purpose for you. You're thinking, I'm going to buy a house down, a year from now. Or you're a follower and we just refinance your loan. But by subscribing or sharing, you're helping the YouTube algorithms get my information out there to more and more and more and more people, so we can help more and more and more people. So that's why please give me a thumbs up, subscribe down below, and smack the bell. So every time I do a video, you can get an alert. The next thing is you're like, Dan, I like this stuff. Now what? Well, do me one of a couple things. If you're building a home, buying a home, or refinancing, and you're in the process right now, you're using a company, they would have had to send you an initial package. In that package is what's called a loan estimate. It'll break down your rate, your fees, your loan amount, the payments, everything. Send it to me. When you go to the doctors, if you have a major ailment or a major surgery coming up, guys, this is major. You're talking, in many cases, our average loan is like $300,000. You're talking, $500,000, $250,000. That's a substantial piece of something. So get a second opinion. Email me, and I'll give you that information in a second. Email me that package or the loan estimate or the fee worksheet. Let me break it down, and I'll either come back to you and say, God bless you. Whatever you got and whatever you did, kudos to you. You did a fantastic job. Most of the time, I write all over the thing in red pen. I got it over here somewhere. And put in there saying, you know what, their rate's $299, mine's $2.75. Their fees are $5,000, mine's $1,200. Let's get this done. What do you got to think about? I'm saving you on rate and saving you on fees. But if you haven't started the process yet and you're like, Dan, I got a VA loan, I got an FHA loan, I did my loan a year ago. We went over the average rates just a little bit ago. From last December to this December, rates are over 1% down. Wonder if you could refinance, skip 1-2 mortgage payments, especially this time of year, and also reduce your payment $200-$300 a month. Not a bad deal. So email me a copy of your mortgage statement. Let me go through the numbers. With your mortgage statement, I'll be able to pull up your home value. I'll be able to see what rate you have and see what your balance is. Then I can do a rate calculator. We have a brand new system that you'll be excited about. I'll send you that, and it's interactive. We can go back and forth and see if it makes sense. If it makes sense, let's do it. If it doesn't make sense, pass, but at least you tried. So that's all I ask for people to do. So now what do you need to do? Well, go to the rateupdate.com. That's my website. You can scroll down. This is my 1-800 number. I have 9 loan mortgage advisors. So if I don't answer, one of them will. They then get your information, they bring it to me, and they'll kind of play middleman, and I'll go through that and make sure we put you into the right program. Watch your locks, watch your fees to make sure we have the best fees in the industry, put you in the best program, and put you on your way to a better financial position in that area. If you want it, please check us out on all our social media. Also, what you can do is, my name is Dan Frio. Email me any of this stuff that you have. When I said the fee sheets, the loan estimates, your mortgage statement, email that to D for Dan Frio, which is Frio, at preferredrate.com. Or go to the website and you're like, I just want to get this started. How do you do it? Well, hit the apply now button. If you're looking to buy a home, hit this. Refinance a home, hit this. If you just want me or one of the guys to call you or girls to call you to go over any questions you have, hit the free mortgage quote. Somebody will be on the phone with you probably within an hour, and we'll go over any questions you have. So that is it for today. All I want to say to you is God bless. Thank you so much for watching. Make sure you give somebody a hug and a kiss tonight. Say you love them, because we're not all guaranteed that we'll wake up tomorrow or we'll be here tomorrow. I'm not trying to be, how do I want to say it? I'm not trying to be weird. I guess maybe that's a bad way to put it. But we all don't have, I just had a buddy pass away from COVID this morning, and I was just with him a couple weeks ago. So God bless you, brother. Wish you the best, and I wish your family the best too. And I hope to see you one of these days soon, and we can hit the golf clubs. So God bless. Take care, guys, and I will see you tomorrow. Same time, same place.